Hello, welcome everyone. It's Trend Trader here. Welcome to this week's market analysis and trading update. And as usual, we start with our disclaimer. Everything that is shared on this channel does not constitute financial advice and it shouldn't be taken as such. If you use our ideas, we're not going to be liable for any profit or losses that result from the use of any material that is presented on this channel. So, as that is clear, now we can proceed to look at the stocks that we're looking to add into our portfolio this week and some trading update for some of the trades that we took in the previous weeks. Okay, let's start. The first company that we're looking at is Adapt IT. So we saw last week there was a spike in share price. Well, we don't know what happened, but I think they reported some results. The market took the result in good spirit and we saw a spike in the share price. And when we look at our chart, we got a buy signal. As you can see that the price closed above the 200-day exponential moving average, which is what we use to get our entry signals. So from here, as you can see, the price is a bit stretched from the 200-day moving average. So now what we want to see is whether the price is going to continue to trade higher or the price will retrace and pull back. But at this moment, we are far from the area of value. But for those people who managed to buy it at £2.15 per share, they got it at a better price. At this moment, it's a bit stretched from a favorable risk to reward ratios perspective. So for us, because we couldn't get a position early, we'll wait for the stock to come back and retest the 200-day moving average. Another thing that might happen is that the 50-day moving average will cross the 200-day moving average, which has a possibility that it will drive the price a bit higher. But this is one of the stocks that we are looking to add into our portfolio. The second stock that we're looking at is AB Inbev. So we're not commenting in terms of whether people are going to start buying alcohol or not. We just, all the ideas that we have, they come from purely from a technical perspective. So same thing with AB Inbev. Previously around July and August, it has been trying to penetrate on the 200-day moving average, but the previous attempt, it failed. It traded a bit lower. So now this is a second attempt. But the way that we look at it at this moment, we're looking at this previous low. This previous low is higher than the previous lows. So now what we're seeing from here to here to here and currently here, it's a series of lower highs. So now the price has broke this in a short period of time. So what we're looking here, we're looking to buy AB Inbev, anticipating that the stock is going to continue to trade higher. And also if we buy here, well, we will buy here and then set the stop just below the 200-day exponential moving average, just in case this is another false breakout. So the second stock is AB Inbev. In the previous episode, we spoke about AVI. We mentioned that some of the consumer goods stock, they're starting to show signs that there's a potential change in the downtrend. As you can see, AVI has over a couple of times tried to break above the 200-day moving average, and now it's happening a lot lately in a short period of time. So for that reason, we will buy a bit of AVI as it just broke and close above the 200-day moving average. Same, the stop level is going to be below the close of the 200-day exponential moving average. We're also monitoring the volatility. As long as the volatility is a bit low, so we will have a tight stop loss, which will give us a favorable risk to reward ratio. The trade that we took on Tiger Brands last week is on profit. It had a similar setup. Tiger Brands is also on the consumer good, and also the trade that you took on TFG is also on profit as we speak. So this is one of the pattern that works. Okay, that has worked for us in our previous trades. I think about 10 trades we took using this pattern, and so far they are showing profits. The other company that is setting up, it's Capitec. We saw that Capitec released results. Well, we don't have much information in terms of the fundamentals, how the results were, but from the chart, what we saw is that it broke above the 200-day moving average, and then there was a bit of volatility contraction here. It traded lower, and then it tried to break above, close lower, but the price is still above the 200-day moving average, and for that reason, and the price is closer to the 200-day moving average. So that's another trade that we'll be taking this week. The price is closer to an area of value. It will give us a favorable risk to reward ratio. Well, besides the technicals, some people, they believe that Capitec is a good business. So we will see from the chart if the market is in agreement with that. We want to see more buyers coming and buying Capitec so that you can start to see profits on the position. We've also mentioned DRD Gold, and last week we mentioned that we just took a position on gold futures. Finally, that position is now on profit. So now we haven't taken a position on DRD Gold because at that time gold was still trending lower. As you can see, the price, it was rising up, then started to stall a bit, consolidate, then it started closing below the 50-day moving average. It closed down, it retested, it couldn't break above, then it traded lower to the 200-day moving average, attempted to go up. So now it has done it twice. Well, we're not saying that this is a double bottom, but now what we're looking to see if this attempt is going to break above. So now we're looking at the price. We're looking how it will trade when it goes back to around 21 Rand 90 cent. Will it break this level and continue to trade higher, or it will find another resistance and then continue to trade lower? So if it breaks above 21 Rand 90 and goes above there, we will take a position whereby we'll be anticipating that the stock is going to continue to trade higher. Otherwise, if it fails to break above this level, we will expect the stock to come back to the 200-day moving average. Then again, once it's back at this level, there are two possibilities. It can find support and continue to trade up, or it can break below the 200-day moving average, of which then for us it spells disaster. We don't buy anything that is trading below the 200-day exponential moving average. Another interesting stock that just came into our attention is Grindrod. So we saw Grindrod also, it closed above the 200-day moving average. Currently it's trading at around 430 cents. The volatility is low. So we're looking to buy this as it would give us a favorable risk to reward ratio. So if you buy at this level, our stop is going to be somewhere around Rand 50 cents per share. But the upside, there's more room for the stock to go up. So it's another favorable risk to reward ratio that we are looking to participate on. So everything, the way we see it, we're just looking the stock as risk to reward. We don't focus much on the fundamentals of the company, what are they doing and everything. For us, it's all about the chart and where do we find a favorable risk to reward. Not necessarily a perfect entry, but an entry whereby we will quickly know if our analysis is correct or if it's incorrect as proven by the market. Another stock that we're looking at, it's Mediclinic, same setup. We had, before we started making YouTube videos, we had attempted to buy Mediclinic. It was last year, October 2019, but the trade was on profit for that time. The trade was short-lived. At the beginning of the coronavirus in South Africa, it started to trade lower, but as you can see, it's been now almost a year and a half, okay, close to 2 years consolidation, and then again it's trying to break above the 200-day moving average. So now this stock is giving us another opportunity to enter, to put money into this stock. So same thing, we're looking to buy at this level, have a stop level below the 200-day moving average. The volatility is low. Well, we can zoom in on the volume to show that there was a tiny spark when it was breaking above the 200-day moving average. But this spike in volume shows that the upward move was sustained by some buyers in the market. So we'll also be buying Mediclinic. Then looking at Stadio, if you recall, we think Stadio is owned or it's under PSG. Well, now there's a lot of unbundling that has been happening. So now we don't know whether it's still with PSG or with all the other PSG group of companies, the companies that are under PSG. But long story short, Stadio is doing the same thing. For some time, it broke above the 50-day moving average, found support a bit, broke lower, came back, found support. So now it's back again. It's piercing the 200-day exponential moving average. And if you look at the volume again, there was a spike in volume. The volatility is low. So we expect the stock to try and continue to trade high. The stock is currently trading at 160 per share. And if the downside, for example, if we were to take 1.5 ATR below this level or 180 or so, and say, let's just say if the stop level is on R1, the stock has a potential to go all the way up to R3 per share. So that is another favorable risk to reward ratio that we're looking at. And then the other stock that we want to comment on, it's Woolworths. So Woolworths has been trying to trend up bit by bit. It broke up. We think that here it's forming what looks like a bull flag. So what we're looking to see here, let's see if we can get the arrow that you're looking for. So now because it's back here, we're anticipating that the stock is going to continue to trade higher. And if it does, then it means that we'll be making money from this position. But last week, because the setup looked the same as the setup on TFG, when you compare the PE ratios of these two companies, I think the PE ratio of TFG was 4. This had the negative PE ratio, but because fundamental analysis is not our strength, we know what a positive number means. We don't know what a negative number means. And the small PE ratio, it means that there's a possibility that the price can double, the share price can double in a short period of time. So we took a trade on TFG. We left Woolworths. So now we're still looking at Woolworths here. We anticipate that the stock is going to continue to trade higher. So yeah, this is another buy that we are looking to add into our portfolio. And previously we had positions on Sibanye Gold. We've closed these positions. We took about 105% return on Sibanye and about 33% on Impala. So the reason for us to exit these trades, as you can see, we haven't removed this to show where we entered the position, the stop level. Well, we don't have take profit. We just allow the stock to trade as high as it can go. But in this case, the stock, after some time, after it reached this resistance level around 175, 176, it started to trade lower. It attempted to go up, but it came back. So when it came and closed below the 50-day exponential moving average, we exited the trade. For us, we prefer that if we make money, we keep that money. We don't want to say we bought a stock, it was profitable for some time, and then we give back all the profits. But then it's not panicking. It's just a set of rules that we have set for ourselves that whenever a certain condition happens on the market, we act in a certain way. So we did as per our rules. So now the stock is back again, trading above the 50-day moving average. So this is another potential entry here. So if it maintains this upward momentum, we will see if the stock is going to break above 181 Rand per share. If it does, chances are it will continue to trade higher and maybe go to 200 Rand per share. it's the same picture with Sibanye. We bought Sibanye. Here we got what looked like a perfect entry because we entered just as it closed above the 200-day moving average. We held the stock, the price doubled, so we had about 105% return. It retraced to the 50-day moving average. It traded higher, and then when it came back at this level, it broke below the 50-day moving average. So we exited to this position. We kept the profit, and then now it didn't even reach the 200-day exponential moving average. And then now it broke above the 50-day. So here it's another potential entry to ride this if it continues to be an uptrend. Just as a comment, when you compare different companies, let's say, for example, if the mineral or the resources sector is sort of bullish at this moment, the stocks that are leaders, they will be the last one to crash if the sector crashes. They will also be the first ones to recover if the sector recovers. As you can see, when you compare Sibanye and Impala compared to DRD, DRD traded all the way, it touched the 200-day moving average, but neither Sibanye and Impala went and touched that level. So to us, it seems like Sibanye and Impala are leaders in this resources sector. And then another thing, we still have our positions and Signia for IR. We saw that, let's see, let's get this ETF. We have this ETF as well that we bought some time. Well, we entered very late compared to people who bought the ETF at its IPO. But this ETF just broke. Previously, it had an all-time high of about 40 Rand 80 cent per share or per ETF. So now the net asset value, it's around 41 Rand. So it's above, it's an all-time high. To us, this is a bullish signal. We have every reason to buy this stock. We don't believe in buy low, sell high. We know that in trend following, you can buy high and sell high. What matters is that the price where you exit is higher than the price where you entered the position. So these are the stocks that we're looking to add into our portfolio this week. We're looking to add Adapt IT, AB Inbev, AVI, Capitec, DRD Gold, Grindrod, but Grindrod is our favorable stock. This is where we see that we are more likely to have a success in this trade. So it's Grindrod and Stadio. Not because they are trading at a lower share price, it's just that the price is close to the area of value. We don't make decisions based on the value or the price at which the share is trading, because a share that is trading at 1,000 Rand per share can still be as profitable as a share that is trading at 1 Rand per share. We're not looking at the price of the share. We are looking at the area where we're getting that entry. Is it close to an area of value? If it's close to an area of value, it gives us a favorable risk to reward, and that is our focal point. So that's it for today. If you have any questions, comments, suggestions, please leave them on the comment section. If you have already subscribed to the channel, thank you. If you haven't subscribed, please don't forget to subscribe and click on the bell icon so that every time we post a video, you get a notification so that you know what we'll be looking to trade in that week. We don't have a lot of updates this week because we've already mentioned that we've got trades that are working well so far. Well, TFG is looking good. We've got cash build among other positions, but all of them are working well. So that's it for today. And thank you for spending time to follow our thinking process on how we do our investments and trading. Thank you. Till next time.